Ismail Yassin. Although I look like Suleiman in this scene, but I am still Al-Shawish Atiyah. In our last session you said that you would discuss the two approaches to calculating the credit loss expense. As a kind interrogator, I am asking you, which one of them you would like to start with today?
Yashawish Atiyah, you know that I have loved to work with you since we acted together in the R movie Ismail Yassin Fay Al Gaish, and I love our master scene, where I said, Yagama, Eli, Ismu, Makali, Yirud. I have known Al-Shawish Atiyah for a long time. He is easy to get aroused, and he will punish all of us. At that time, you yelled at me and started calling me bad names, because I was really an extremely idiot. However, in answering your question, I will start with the income statement approach, or what is also called the percentage of sales on credit. Under the income statement approach, entity estimates the periodic credit loss expense as a percentage of sales on credit.
What is the journal entry to record the periodic credit loss expense?
The journal entry is, debit the credit loss expense account and credit the allowance for credit losses account.
When the ending balance of allowance for credit losses is determined under this approach?
The ending balance of allowance for credit losses is determined after all the activity in the allowance account is recorded during the period. The following example explains how ending balance of allowance for credit losses is arrived at. Al-Dayasti Samir and Kapitan Azuz Company has the following unadjusted account balances at the year-end. Cash $85,000 debit, accounts receivable $100,000 debit, allowance for credit losses $2,000 credit, and sales on credit $500,000 credit. Based on its experience, Al-Dayasti Samir and Al-Kapitan Azuz Company expects credit loss to average 2% of sales on credit. Thus, the estimated credit loss expense is $10,000, being 2% of $500,000. The year-end adjusting entry is, debit credit loss expense for $10,000 and credit allowance for credit losses for $10,000.
Based upon the example, what is the year-end adjusted balance of allowance for credit losses? And how the carrying amount of the accounts receivable appears in the balance sheet?
The year-end adjusted balance of allowance for credit losses is $12,000, being the allowance beginning balance of $2,000, plus the $10,000 added to the allowance account during the current year. The carrying amount of accounts receivable or accounts receivable net appears in the balance sheet as $88,000, being the gross account receivable of $100,000 minus the year-end balance of allowance for credit losses of $12,000.
Thank you, Ismail Yassin, and the next session I will interrogate you about how credit loss expense is calculated under the balance sheet approach.